Welcome back. A quick look at the markets. Well, actually, it's been a very, very tepid day. The markets, the bottoms are being bought, but the market is not able to make much of a headway. Sleepy kind of day, probably waiting for the weekend and not wanting to take too many chances until then. So let's get you the first mid-cap management in this show. We are speaking to the VC of Sabera Organics. Sumit Chuganee joins us. Sumit, thanks much. First and foremost, if you can take us to the new development in your company. You've got some products registered in Brazil and you also have some JVs going over there. What is the stage at which those companies are? Are you expecting that to open up that market in a big way?
Right. Well, a couple of years back, we opened up a subsidiary in Brazil. The main focus was to get registrations. That's the main barrier to entry in our industry. If you don't have registrations, you can't sell the product. So we started registering 4 products. We currently have an office in Sao Paulo and Belo Horizonte. In the current year, we got our first registration. So we introduced our first product in that country. We expect out of the balance 3 that we've applied for, 1 in the current financial year and 2 in the next financial year. So as we keep on getting registrations, we keep on introducing new products. These are all products that are sold to distributors in that country under our own brand name.
Are margins so much better when it gets to a country like Brazil? What would be the interest?
It is a more regulated country by definition, so there are less competitors, more difficult to get registration. So yeah, I think the margins are better than in other places like in Asia where they're more, less regulated countries. Yeah.
Sumit, you are in the crop protection space now. A lot of investors are interested in this entire agri theme. They want to know how these stories work, what's going to happen. You're already about a 500 crore turnover company. Outline for us what your growth trajectory is, where your key markets are going to be over the next 2 to 3 years in terms of a top line sort of growth.
Right. Well, our business is based on the domestic market as well as the international market. So both those segments are going to grow for us. In the domestic market, we're going to, increase our branded formulation business. We currently are already in major states like Andhra, Tamil Nadu, Punjab, Haryana, etc., etc. And we're going to, increase our penetration dealer network in that part of the market. As far as international market, there are 3 or 4 key areas for us. One is Europe. We recently got a registration in the UK in the current year for one of our weedicides. And again, we started distributing that product in our own brand. So we have a plan of adding, multiple products in multiple countries in Europe under our own brand name. So that's a focus area. Brazil, as we just discussed, is another focus area. And in general, Latin America is a focus area, such as Colombia, Peru, Argentina. We currently have subsidiaries in Argentina and Brazil. And so that's going to be another focus area.
Well, Sumit, going by the numbers we have, your first half consolidated numbers indicate that you're growing between 15 and 20% as far as sales are concerned. Give us an idea of what margins you're doing and whether you can substantially step up from this 15% growth pace in the next 12 to 24 months.
Right. Well, in terms of margins, we're currently, we believe that we want to be in the 16 to 19% range. And even in terms of future growth, the products that we choose would be products that we believe can deliver those kind of margins. So going forward with our existing product profile, we believe we can deliver those kind of margins in the 18% EBITDA range. As far as growth, I think we're looking at growths in the region of 20 to 25% on a realistic and achievable basis. Part of that is going to come from existing products and part of that is going to come from new products that we intend to manufacture. In terms of existing assets on the ground, where investments have already been made, we believe that we can deliver sales of about 750 crores with no further substantial investment. So there it's more of a question of sales, getting new registrations, new customers, increasing our sales pipeline. Of course, we do have a strong R&D, part of the company, and we have multiple products at different stages of development, and we have a well laid out plan of introducing at least 1 or 2 products every year.
Your first half consolidated EPS came in at about 7.09. Would it be safe to assume about 15 rupees by year end and about 18 to 19 rupees factoring in your growth rate by FY11?
I think in the current year, the second half would be similar to the first half. So, in the 13 to 15 ranges, what we're looking at. As far as the next year is concerned, we believe that we'll maintain the same margins. And we hope to have an increase in top line of 20 to 25%. So it'll go along with that.
All right, Sumit Chuganee, thank you very much for joining us.
Thank you. Nice.
Need to take a break, but we'll have another mid-cap company management joining us. Praj Industries, they have done an overseas tie-up, and then of course the stock could get some leg up with all the climate change and climate change control issues that are underway. We'll touch base with the management of Praj Industries in a minute.